Welcome to Markets Now. I'm Michelle Ruck along with Mike Zuzulo with Global Commodity Analytics. Some mixed market activity already this morning in grain and livestock futures trade. And Mike, I want to talk about soybeans because we did regain some strength yesterday, spilling over in today. And some of that has to do with this weather forecast, doesn't it?
Yeah, I think a lot of it does, Michelle, and I think the trade continues to see the soybeans as the best demand bull out there to go after, and it stays the long side of the spreads. And so we have this once again contrasting market where the beans are trying to pull everything together to the upside, wheat's trying to pull everything down. And I think the bean corn ratio is going to be an extremely important piece of the puzzle in the next 5 to 10 days because it's hit a contract high now of about 2.77. So Nova beans, 2.77 times premium Dees corn. We've stretched that rubber band, in my opinion, to the point where either the beans continue higher and end up starting to pull corn higher with it, or the beans start to follow the corn and wheat once again. And we've seen times when both of those things have happened. I'm inclined to think with the CPC NOAA update today on both the seasonal drought looking like it's going to persist, if not expand over the next 30 days some of the hottest areas of where this ridge of high pressure is supposed to be centered, along with CPC putting out a special weather statement about this extreme heat in many areas, including Iowa, Kansas, Nebraska, Missouri. These states could see daily record highs early next week. No matter how much rain you've gotten, it's going to be something that could be an issue for tip back and pod abortion. And I think maybe the corn will join up with the beans. And obviously the extent, the length of the heat is going to probably what decides where the market lays as far as how much damage is being done at this point.
Yeah. And you mentioned demand and exports. And again, new crop exports, good this morning on soybeans. With the weather that you just talked about, is that enough to get China spooked to come in and continue to buy our new crop beans?
Yeah, this is the dichotomy this market faces. They continue to look at the overall weakness in China. They look at the offshore currency in China nearing a record low against the US dollar, going all the way back to when the offshore yuan was set up in 2010. And yet they kind of disregard, I think, a little bit more than they should, the fact that China is in need for corn, beans, and wheat, especially soybeans, and they're still racking up a 9-10 million metric ton a month purchase by someone. And so their demand's not backing down. It's actually going higher. And, we saw some updated private estimates from the World Grain Council. And while they raised the overall corn output this morning, they also took down about 2 million tons the Chinese corn production. And so between that and the WASDE report last week, upping the wheat needs for China, I do think that weather they had, that historic rainfall they had in Northeast China, really has some issues to have to contend with, and market pricing needs to go back and look at that.
Yeah, they had that flooding, and obviously their corn price took off as a result of that. And so do you see, China's not been a big corn buyer at all this year. Will they come in and buy corn as well? I mean, what is your assessment about what's going on with their economy as well? Because they lowered interest rates this week. They're trying to stimulate the economy, aren't they?
Yes, they are, and they have to at this point because they are in kind of a deflationary spiral. They are probably in a real recession. They're not near 5% growth, in my opinion, Michelle. They're probably barely at 2.5%, and they really do need to stimulate. And that's the heart and soul of why I think we're dealing with 2019, 2020 levels in the corn and wheat prices right now. As I said a minute ago, the wheat and the corn don't have the support of the demand side like the beans do in the market mindset. In fact, they have the exact opposite. But when you talk about, almost $4 billion being pulled out of the Chinese equities markets in the first half of this month, that's second only to when the trade pulled out double that back when zero COVID it was established back in October 2022. And you throw on top of that the 10-year yields that we're looking at right now, going back up to the areas close to when we had the financial crisis and the Great Recession of 2008. I think the market is laser focused on China and the negative side that's going to spill over and there's going to be contagion. So that's the rub that we have right now.
Yeah. Meanwhile, the Ukraine Black Sea situation, we continue to hear grains moving and production has been upped in Ukraine. Whether they can get it out or anywhere is, I guess, another question. But it just doesn't spill over to any demand for the U.S., does it?
No, it really doesn't. And we're looking at a very binary market in terms of how the trade looks. They're looking at the Russian ruble falling close to the invasion low against the US dollar this week. We're also looking at the idea that the United States is going to help support a new grain corridor for Ukraine. And with the United States military maybe backing that or supporting that, I think the trade is looking only at the demand side, the export side for the wheat. Weekly export sales were up about 3% on the 4-week average, which is saying something because it has
Okay.
steadily been building, even with this really super strong dollar. So I feel like the wheat is very, very cheap at this point, and we are near the Russian prices at $240 a ton, and we think their minimum price is about 250 unless they do a special deal with India.
Gotcha. So anything technically you're watching in these grains, because you've got November beans have stayed above the 100-day moving average, but we took out the July low here in corn early this week. We got back above 481 yesterday, but those are kind of critical, aren't they?
They are. That this is the tipping point, I think. I think you bring up a huge point. 573 area, 573 and a quarter was the May low in the soft red wheat. If we take that out, some of the indicators and some of the indices that I look at as far as percentage breaks and potential fund running into shorts could say another 4 to 10% down. So I'm actually going to get floors in place in the form of bought puts for corn if we can't hold that 480 level, because I do think a 40 to 60 cent slide in corn and wheat could be in play, especially with these outside market factors. We haven't even talked about Argentina and the fact that some news and financial people think that Argentina could be nearing an economic collapse.
Well, inflation has been rampant there. And of course, they have been doing this corn dollar program or peso program. And, that has not been positive for our corn market either, has it?
No, and in fact, it's been completely factored into the currency markets. The agri-dollar was about a 20 to 30% win for the farmer in currency. The currency went down 30 to 40%. They've got official inflation of 300%, 350. The unofficial black market number is probably closer to 800%. So Russia and Argentina are nearing hyperinflation at this point, and China is not helping the emerging markets at all. And that's a real contrast to what we've seen over the last 20 years. Usually China comes in and bails those emerging markets out through a lot of monetary stimulus.
Yeah. All right. So live and feeder cattle futures under some pressure here this morning. Boy, the markets look kind of tired. The cattle market does.
Yeah, I was surprised the cash market was not developed yet. We really need to be buying here from the packer perspective for that last summer grilling holiday for Labor Day. And the numbers that I saw was Kansas was back below 180. I thought we'd be closer to 185, 186, right in the middle of where the Dakotas are probably closer to 190 with the Western Corn Belt, and Texas may be closer to 180. But it seems like the cash market's really softened, and the futures market no longer looks like it has a discount. But I'm really most concerned about the feeders. Ever since last week's WASDE report, they're looking at a much bigger production number for beef. Commercial numbers up almost 500 billion pounds versus the 500 million pounds versus their prior July estimate, and that would be based upon them saying more placements coming in late 23, early 24, makes this Friday's cattle on feed numbers really important.
Yeah, no doubt. And then we're kind of hypersensitive about the economy and what's been going on with, even the Fed minutes yesterday saying that they're going to keep ratcheting up interest rates here, it looks like, huh?
Yeah, and that's where the weekly and domestic retail numbers look pretty similar. Really good for pork this summer domestically, really good weekly export sales, up 36% from the 4-week average, China being the number 3 buyer. Beef, not so much, both domestically. It's held together probably better than many would have expected, but from an export sales standpoint, down about 13% from the average. So I'm watching that cattle hog spread. We got up to over $100 October fats over October hogs. That usually trades around $70, $80. So that could be one of the areas that the funds focus on.
Gotcha. Pork exports were pretty decent this morning, or at least better than they have been. And we've got the hog market up just a little bit this morning. So exports, the futures discount, is that enough to kind of start basing this market, do you think?
Yeah, that's how I would word it. Exactly. Basing, the August went off the board at a much bigger premium, but I think that was because of the belly seasonal and what we were looking at for the summertime. We don't need to go up to that level, I don't think, in October. But by the same token, we found demand at this $80, $90 level. And I think that's where the October and D's futures have a substantial basing mindset to them at this point.
Okay, thanks for joining us. Mike Zuzulo with Global Commodity Analytics. That's Markets Now.